Hi everyone, Gary Coleshill here, and you are in the right place. I'm here today with our special guest, Scott Rulon from Rulon Financial in Phoenix, Arizona. And Scott's going to be talking about Social Security planning and how to maximize your Social Security income for retirement. So good stuff indeed. So grab a pen and a notepad. Be prepared to make a lot of notes. If you have any questions during uh, the event itself, this is, by the way, an educational event. There will be no sales or anything at the end. But anyway, if you do have any questions during the process here, then feel free to post them in the chat box, put them in the Q&A, and I'll try and answer them for you. And if I can't, then I will pass them over to Scott. So without much further ado, welcome, Scott. You have the floor, so take it away.
Absolutely. Thank you, Gary. And so thank you all for attending. We try to make these as close to 30 minutes as we can. Just a little background on me. I've been a professional accountant for darn near, I counted it up this morning, 36 years. So been helping lots of people with their taxes and maximizing their Social Security for many years. So this is an educational webinar. Obviously, nothing fits everybody, but what I can tell you is for millions of Americans, Social Security is a critical piece of the retirement puzzle, an important source of retirement income. So today's program will help you learn more about Social Security so you can make the best decisions for you and your family. We are hopeful you will benefit from our time together. So just so you know, we are not the federal government. We're not associated with them or the Medicare program. The information we cover will represent our current understanding. Of course, laws are always in flux. So always important to talk to a professional. Certainly consulting with an enrolled agent, a CPA, or attorney before implementing any of these strategies, or perhaps even the Social Security office itself, where you can certainly make an appointment and run through some strategies with them. And just so you know, no part of this presentation is intended to make an offer of sale or purchase of any specific security or insurance product. In other words, this is a learning thing. Is what we want to do today. So today we're going to talk about what is Social Security, where does it fit in your retirement plan, understanding benefits and claiming options, impact of work on benefits and claiming considerations, Medicare and taxes. So with all the disclaimers and topic stuff out there, let's get started. So in any retirement plan today, because not many people have pensions anymore, probably about, I don't know, last time I looked, 3 to 4% of you actually have pensions, which means most of you work for some type of government entity. That includes cities like fire department, could be election department, could be the police department. So Social Security was really designed to cover the first 30 or 40% of your retirement benefits. On top of that, you have your own savings and insurance. So when we say savings, obviously that's savings in a bank account. Insurance can include things like annuities or life insurance. On top of that, that pyramid, we certainly have different types of investments. Most common investments people know are things like mutual funds, stocks, bonds. Of course, it's not limited to that. There are others, and some of you are lucky enough to want to plan for legacy, or you may be the recipient of some legacy money. For those of you that don't understand that, that means you probably had wealthy parents or a wealthy uncle. So we'll just leave that at that. That's not really a retirement strategy, but some people are lucky enough to have that. So your choice of when and how to file for benefits can have a significant impact on how much is guaranteed lifelong income and your spouse will receive throughout retirement. Believe it or not, there are ways that you can maximize Social Security. So Social Security is more than just a monthly check. It has 6 distinguishing features. The first being lifelong income. Actually, as far as we know, it's guaranteed for the rest of your life unless something happens. Market volatility. So great thing. Benefits are not impacted by stock market volatility. Inflation protection. Every October, the Social Security Administration determines the COLA, also known as the cost of living adjustment increase for the following year. Social Security can have spousal benefits. Benefits may extend to a current, former, or surviving spouse. Important to know that when you have spousal benefits in there, that does not affect your own benefit. So certainly we have tax favored benefits receive preferential tax treatment compared to other sources of income. Some of you will pay no tax on your Social Security depending on your income. Some people will pay tax on 50% of your Social Security, and others will pay tax on 85% of their Social Security. But that is really dependent on your income. There's a special side calculation. We often call it MAGI. That stands for Modified Adjusted Gross Income. And it includes things like the permanent Alaska dividend. If you don't know what that is, don't worry about it. That includes the Commonwealth of Puerto Rico, where they have some special Puerto Rican benefits. And the other major difference, it's really the only place where municipal bond income, which is normally tax-free, can cause your Social Security to have some taxability. So where was it created? By that man we probably remember in school, FDR, Franklin Delano Roosevelt, the only president to serve 4 terms. In fact, the reason we have 2-term presidency today is because they got sick of Franklin Roosevelt. At any rate, Social Security was signed into law by President Roosevelt on August 14th, 1935, and is financed through a dedicated payroll tax. So remember when you were a kid and you knew that you had earned like $100, but you only got 70? Well, the biggest chunk of that was what they pull out for Social Security. And so the thing about Social Security, it's not only paid on your side, but it's paid on the employer side as well. So the employer has to pay a match on that. So the first benefit was received as $22.54 and was issued on January 31st, 1940. I used to know the lady's name. I just can't remember it all, but I will tell you, she's passed by this time. I think she actually passed in the 1980s. But she basically made one payment in Social Security and took out a lifetime's worth. So today's Social Security is the largest government program. There are an estimated 50 million Americans currently receiving retirement benefits. And this includes, you got it, 97% of our, what we'd call our elderly population. So as a result of it increasing life expectancies, so obviously people are living a lot longer, changes in what we call demographics and economic influences. And I would say even to a certain extent, the level of medical knowledge that we have today versus in the past. Social Security may see some changes in order to maintain the financial stability. So currently, with no legislative changes, Social Security should be able to pay full benefits through early 2034. After 2034, if nothing changes, it should cover about 77% of future benefits. So where does Social Security fit in the entire equation? So for retirement, so certainly we've got things like Social Security. For that lucky few of you, 3 or 4%, you've got employer pensions. Most of you are real familiar with the term of 401k, founded by a man named Mr. Keogh, long time ago, I believe in the 1970s. There are other plans kind of like 401ks, are called 403bs, 457s, so etc. Certainly, some of us have personal savings. We have earned income from payroll. Some people have annuities. And one of the other things that most people don't think about when they think about life insurance, they think about death. Actually, the way to think about it is if you borrow against the cash value in your life insurance, that money comes out tax-free. Interesting, isn't that? So we're just letting you know, Social Security is really designed to cover 30 to 40%. I mean, I think the 40 is a bit high, but I think it's closer to 30, but at any rate, it is certainly a great base for retirement income. So this is the Social Security motto: securing today and tomorrow. And so we're going to give a couple examples of no one specific, but to give you a good idea how this all works. So in this case, with our case study of someone that's receiving $2,000 monthly, $24,000 annually, which means if they live to the age of 90, they would collect 288 payments and they would receive at least 700,000 or more of cumulative benefits. Two main factors are your earnings history. For those of us that have worked our entire life in the United States, they actually take an average of the 35 highest earning years. But to actually qualify for Social Security, you actually only need 40 credits. So that's 40 quarters or 10 years of work. There is a certain, get different amounts at different ages. And so here is down there what we call and we'll see this acronym later on called PIA, but it's your primary insurance amount. So it's the highest 35 years of average indexed monthly earnings. So there's always some convoluted way they calculate these things. For those of you that have not been getting your Social Security statement, I highly recommend that you get it. Here's the reason why. It was not but a few years ago when we checked my wife's Social Security statement and we noticed that there were a couple zeros on it. So we literally had to provide W-2s for those years to Social Security to get those zeros back to what they should be. And so here is the website. You probably want to write all this down. So www.ssa.gov /my account. So you can look up your estimated benefits. You can look up your earnings record. You can look up your taxes paid summary, and you can look up other useful tips. And so there's many things on that statement. In fact, I had a really interesting case yesterday. We were talking to somebody about Social Security, and Gary, you may be interested in this. They've not only qualified for the UK pension, but they've also qualified for a Canadian pension as well.
Oh, wow. Okay.
So they have a little of both. When you have a unique thing like that, there's some little different rules called WEP, windfall elimination profits. But that's a more advanced topic for another day. So when do you reach your PIA, primary insurance amount, also known as full retirement age? So it is certainly based on your year of birth. So if you were born between 1943 and 1954, you reach full retirement age at 66. 1955, 66 and 2 months, and so on until we get where a lot of us may be today, 1960 and later, you can start receiving your Social Security benefits at age 67. So So just look at where you are in this age category and you'll understand where you can receive your full retirement benefits. So here's an important thing. Benefits increase each year you delay past FRA, also known as full retirement age. So many of you, if you want to, you can start receiving benefits really at age 62. If you are a widow and you are age 60, you can also start getting them. The thing is, down here, there are some stipulations that go along with that. So this benefit here, this 1441, is about 75% of what you would get about full retirement age. Then each year that grows about an extra 8% till at full retirement age, whether you are 66 or 67, you'll know by your birthday. That's when you can get your full amount. For those of you that are willing to delay for a couple of years to 68, 69, or 70, your benefit can grow by an extra 8% a year. So there's the early people, and then there's the delay people. We actually have, interestingly enough, we actually have some software that can help you with some of that, that we offer as a complimentary consultation. But beyond that, so if you start early, you'll get less dollars. If you delay it, guess what? You get bigger dollars. In other words, you get more money the longer that you wait. So here's just a little break-even chart of Joe and Jane, and longevity. So I think there's a lot of things that go into it. You kind of have to look at, how long do people in my family live? If they don't live a long time, maybe you want to start earlier. And don't discount the value of taking the benefits earlier because you're giving up a certain chunk of money, rather than starting later. So there are many factors to consider, such as survivor benefits, opportunity costs, and inflation. A break-even analysis can be useful in determining when to start receiving benefits. Conceptually, if you live an average life expectancy and you end up with very similar results no matter which option that you choose. However, if you think you'll live longer than the average life expectancy, then wait for a larger monthly check. Might be a better decision, but it is certainly a unique decision to each and every person. So let's say I decide to take it early. That would be age 62, 63, 64, and 65. That money is subject to what we call an earnings test, and benefits will be reduced. And by the way, they are permanently reduced. And the earnings test is really, if you end up in what's called earned income, you also know it as W-2 income. If you earn greater than, last I saw, the amount was $16,875. For every couple dollars you earn over that, they will take away $1 of Social Security benefits. Good news, the earnings test does not apply after your full retirement age. So that's a good thing. There's no chance of having to send it back. Any amounts withheld will be added back to your benefits after you reach full retirement age. So 3 primary factors: earnings, history, election age, and life expectancy. Other factors may include health, marital status, a desire to continue working, and access other income. Sometimes a good strategy might be to work up until age 70 and then start getting your Social Security then. So certainly that's not the right strategy for everybody, but it certainly is for some of you. Just some little graphics here. So claiming summary. You can begin at age 62 for a worker and spouse. Age 60 if you're a survivor. So certainly your benefits are reduced before full retirement age, and continued employment is subject to an earnings test. So after you make a certain amount of earnings, they do start pulling away Social Security benefits for that. So at FRA, full retirement age, a worker receives full retirement benefits. Earnings tests no longer apply after the full retirement age. And the last one, after FRA, worker benefits increase each year till you delay past the age of 70. But you cannot delay beyond 70. So you certainly get the largest benefit in terms of check form after age 70. And so, by the way, this increase does not apply to spousal benefits. So before FRA, after FRA, and at what we call FRA. So here's the thing. So claiming if single. So most of you know what a Social Security card looks like. It's this little blue and black thing. There are two basic options. Remember that old discount tire commercials, pay me now or pay me later? Oh, this is kind of like claim now or claim later. So 3 types of spousal benefits. So spousal you can get without, by the way, affecting your spouse's Social Security, very important, up to 50% of the working spouse's PIA, no delayed credit. To get that, you have to have been married at least 1 year, have to be age 62 or older. And to get that, by the way, your working spouse must file for benefits before the spousal benefit is available. So you cannot, it used to be you could get it beforehand. That is no longer the case. Today, the spouse that is working must file for benefits and the other spouse can get it. In cases of divorce, you can get up to 50% of the ex-spouse's permanent insurance amount. To do that, the marriage must have lasted 10 years or longer. It must be age 62 or older and currently unmarried. After 2 years, the ex-spouse filing requirement is eliminated. So just a real case study here. So we got our friends Jackie and Steve, and Jackie's not eligible for retirement benefits based on her own work record. However, Steve at his full retirement age can receive $2,400. Therefore, Jackie is entitled when Steve files to a benefit of $1,200 as a spousal benefit when Steve files for his own worker benefits. So the total household income from Social Security would be, in this case, $43,200. So spousal benefits case study. So if Jackie claims before full retirement age, her benefits would be permanently reduced. For instance, if she applied for spousal benefits 3 years before her FRA, her benefit would be reduced from that 50% to 37.5%. Therefore, her spousal benefit would only be $900. Jackie files at full retirement age, she's going to get the full $1,200. And even if Jackie waits till after FRA, she gets the $1,200. So there's no use at, for Jackie to file later once Steve files. There's no financial benefit for that. So just remember different rules for different place, and if you file before FRA or after FRA. So eligibility, these are called survivor benefits. So they're available to widows, widowers, and surviving ex-spouses as well. You must have been married at least 9 months, except in the case of an accident. You must be 60 years or older and currently widowed or remarried after age 60. And remarriage after age 60 does not impact eligibility for survivor benefits. So survivor benefits are 100% of the deceased spouse's benefit amount. So basically, it's very possible to get a step up here. So reduced benefits can be taken at age 60, age 50 if disabled. They are subject to an earnings test if still working. And dual eligible widowers can switch between worker and survivor benefits. So this is certainly one of those situations where you want to get the benefit that's going to pay you the most. Claiming considerations as a general rule. So general rule means not all the time, but most of the time. Do not claim benefits early if you plan to keep working and are subject to the earnings test. And so obviously that's 62, 63, and 64, and 65. Special election decisions can have long-term impacts on the amount of benefits received. So probably a good idea for many of you for the spouses to wait until the working spouse is filed. Married couples should coordinate their claiming strategies and plan in terms of their joint life expectancy. In fact, joint life expectancy for a married couple, statistically, 25% chance one of you will live to age 92. So delaying the benefits of the higher earning spouse can help maximize both the retirement benefit and the survivor benefit. So change your election. If you are receiving and change your mind, you get a one-time chance to do it. So if you start receiving it, decide you don't want to, you can withdraw your application, but you do have to repay all the benefits you received. And after 12 months, you cannot withdraw it anymore. I'm supposing because most people wouldn't have enough money saved up to repay it back. So you are limited to one lifetime withdrawal per lifetime. You must repay all the benefits, and there's the form in case of anybody wants to do that in your first year. SSA 521. So depending on your income, Social Security retirement benefits could be subject to taxation. So if you make less than $25,000 as a single filer, you will pay no tax on your Social Security. 25 to 34, you'll pay on up to 50%, and over 34 up to 85%. It grows a little bit for the joint filers, so 32%, nothing, 32 to 44, up to 50%, and more than 44, greater than 85% of your income is subject to tax. Now, please understand, those are not your tax rates. Those are the amount of Social Security that is subject to tax. And so that can really change on a yearly basis. So provisional, so here's the little side calculation. They take 1/2 of your Social Security plus wages, pensions, and investments, interest. QP stands for qualified plans, and IRA withdrawals. And that wonderful thing, non-taxable muni bond interest. This is the only place in the world where municipal bonds can make something else subject to extra taxation. This case, that being Social Security. So Medicare and Social Security, Medicare B premiums will be automatically deducted from your Social Security benefit. So that's often known as Medicare Part B. Part A is hospitalization. Generally, Part B is like doctor and other services. Most people will pay the standard premium amount, but if your income is above a certain amount, your premiums bill will be higher. Want to know what that, any idea what that's called? It's called IRMA. IRMA is usually a great surprise to many people. Perhaps you have a one-time IRMA event. In that case, you can file an SS Form 44 and just let them know this is a one-time event that will never happen again. So we'll let them lower your premium, because the IRMA can cause your premium to go up by a factor of 2 or 3. It is not a pretty thing for those people that see it. Certainly there's government pension offset. So applies to workers who work as applying for spousal or survivor benefits who are also receiving a pension from a non-covered government job where Social Security benefits were not withheld. You know where I see that the most? That's probably fire and police is where I see that the most. The GPO reduces the amount of your spousal or survivor benefits by 2/3 of the amount of your government pension. So if you're a firefighter or a police person, you take 2/3 of what you receive from there, and they'd reduce Social Security by that much. Here's the other interesting one: windfall elimination provision. The WEP is a recalculation of your Social Security benefit if you also have a pension from non-covered work where no Social Security taxes were paid. Pension payments may reduce Social Security by up to, in this case, it's not 2/3, it's only 50% in this case. The impact of WEP, a windfall elimination provision, starts to decrease if you have more than 20 years of service at a job where you paid Social Security benefits. So here we go. So here's the phone number for Social Security. Make sure you all write it down. If you want to look at stuff about Social Security online, www.ssa.gov. So again, www.ssa.gov. Please understand there is a completely separate website for Medicare. It's called medicare.gov. Anybody that is on Medicare, I would definitely recommend you sign up for medicare.gov. It really goes into the different types of prescription drug plans that are available as well. So you can check out just about any company there. The other way to do it is just schedule an appointment at your local Social Security office. That's an excellent thing to do. Always recommend you schedule an appointment, whether you're going down to Social Security office, even the IRS office, or sometimes you will not get in. So one of the things that we can do for people is provide a complimentary custom analysis of what might be your best way to do Social Security. And so this is a little bit about what that report looks like. So in conclusion, I think most of us now realize Social Security is the foundation of the retirement income plan. Understanding your options and making informed decisions can help you maximize your benefit. We would be happy to work with you to assess your individual or personal situation. To do that, we generally need a copy of your Social Security benefit statement. So thank you so much for sticking with me. I know sometimes we dazzle with lots of different numbers, but I think the important thing you should gather from here is there certainly are ways to increase your Social Security benefits by waiting a little bit longer to take them, especially after the full retirement age or more. You can literally earn an extra 8% per year on your Social Security benefits until age 70. Very important. You have to apply by age 70. It's just, it's a necessary thing. Waiting longer just means that you're hurting your own pocketbook. Certainly look at the spousal benefits are so important. So to maximize those, especially if you have a non-working spouse. And nice thing is, if something happens to you and your spouse gets a higher benefit than you do, you will inherit that spouse's benefit. So if you ever want to contact me or maybe get one of these free reports at some point in time, certainly call us at 602-824-2299, or you can email Gary or myself. My email is scott.rulon29@gmail.com. And I know Gary, because of the guy he is, always posts his phone number and email address.
It's already in the chat, as is yours.
Oh, I figured you're so efficient, Gary.
I try.
Yeah, so Gary's having some laryngitis issues over the last couple days.
Vocal
So
issues.
on behalf of Gary and myself, thank you so much for attending. I don't know if Gary, do you have a little bit extra information you want to give people about what we're doing next week?
Well, next week I believe we're doing a very special college planning event. If you have children that are, well, if you have children at all, because at some point they will probably want to go to college, that could be very, very informative and save you literally thousands of dollars by attending that. That's a great session. Scott is a master of college planning, and in fact helped me and my family out by getting some really good grants to help offset their expenses, their college expenses. We're also going to be talking now because for any of you that are in small business, you probably had a bit of a shock email letter this week on behalf of actually mine came from the Arizona Corporation Commission. You know what I'm talking about, Scott. The
Could it be
corporate,
the Corporate Transparency Act?
well, yeah, exactly. No one had heard of this until this week. And this week I got one letter from the National Association of Realtors, who are the world's, certainly the country's largest lobby group, I think. They're going crazy over it. And they're sending out emails about it because I actually do have a real estate license too. So they're sending out stuff to their members, and they got a lot of members, obviously. And also the corporation commissions around the country are sending these letters out to everyone who has a business that's, even if it's basically sole proprietorship, I
Yeah, it
believe.
might
Is
even
that
be a
right?
little hobby business. You do stuff on the side.
Yeah, it's not, we're not talking about big companies here because I'm not one. And I've had two different letters about it this week. From,
Yeah, in fact, latest
yeah,
information that I've seen, Gary, as of yesterday, this could affect 32 million businesses in America.
that's a lot of people. This is going to
It
be a
is.
major shake-up, and Scott has already, because he's a very well prepared gentleman. He probably was a Boy Scout.
I
Uh,
was a Boy Scout. I was an Eagle Scout, Gary.
are you? Yeah, we would say you're a Boy Scout. But anyway, yes, he's already figured out a lot of things about the Corporate Transparency Act and how you can get around the worst effects of it, let's say. So that's a good one coming up. So if you want to be involved in any of these things, shoot me an email to Gary C at eliteprospeakers.com, and I'll make sure that you're on the list for future events. You don't have to attend, obviously, but we'll put you on the list and send you an invite each time we do one. So make sure you do that. Shoot me an email over to Gary C at eliteprospeakers.com, and you can get to hear about these other interesting topics we have coming up. So
Yeah, and so I know at the end, Gary, I think you have a little a fill-in form. And what we like to know
yes,
here
we
is
do.
if you have any other financial topics you would like us to talk about. We are so happy to do that. Our job is to help all of you do the best you can with your own finances.
Yeah, that will pop up when we actually sign off. It'll come up in the browser on your computers, and you can add in anything you want as long as it's polite. We don't mind. So if you want to subscribe to other webinars, just make a note on there, and I'll see that because I go through them and verify them afterwards. So yeah, any comments, anything you'd like to see on a future event, or if you just want to subscribe, that's fine. Just let me know on that form, and so I go through them quite carefully. And thank you very much. Thank you, Scott.
Absolutely.
Impressive stuff today, and I'm sure a lot of people will be very excited to get some ideas from that. And there is an advanced one next week on, let's say, on college and corporate transparency, and we'll probably add something else as well. So hope to see you all at those as well.
Sounds good, Gary.
Great. Thank you very much, everyone.
All righty.
And we're going to stop recording now. Thanks.